Hi everyone, I'm an MBA Finance with over 7 years of experience in the equity research industry. So currently I'm working with Mirae Asset Capital Markets as a consumer analyst. So I worked here as an equity research analyst in the past in the buy side firm. So today I'm going to discuss more about the FMCG sector. This sector has witnessed positive consumption trends at the pan-India level. It has recorded a volume growth of 8.6% in the September quarter. While growth was pegged at 9%, this volume growth was backed by gradual recovery in the rural consumption and continued robust urban consumption trends. This pickup in consumption was also supported by the fact that rural consumers are beginning to spend on non-food categories beyond essentials. The sales growth of FMCG companies in this quarter was seen impacted due to the festive loading shifting to Q3 and from the price hike annualization. So FMCG companies have largely managed to maintain product prices in a muted demand setting due to easing raw material prices. This has overall helped in better than expected gross margin delivery. So rural market has seen recovery on a low base, but demand rebound is missing. So urban market continues to do well still on the back of accelerated growth in the modern trade and e-commerce channels. FMCG sector overall valuation is trending near the last 10-year average forward PE of 49x, are holding up on the hope of demand recovery in the second half of FY24 and thus aiding double-digit earnings ahead as margin-led earnings story is still largely at play. While we see continued recouping of margin ahead, recovery in the demand may require players to pass on raw material benefits for accelerating volume growth. Retail sector, especially in discretionary, we've seen experiencing a notable surge driven by positive sentiments and promising trends. With the robust supply pipeline, the influx of international brands in various categories and upcoming festive seasons, the retail sector is the bio end as of now. Besides, the resurgence of consumer sentiment and increase in the consumer appetite and the widespread adoption of omni-channel strategies by retailers are likely to further propel the growth graph. So broadly, I think this industry right now is going to the rural market downturn, but we still see economy increasing in the rural side. We see some green shoots. This will be an exhibiting signs of normalcy. As a result of improving labor market, rising trends of trade for rural production, demand for FMCG products overall is increasing in FY24. So discretionary categories are growing healthily. We see huge headroom for growth for Indian consumer discretionary companies thanks to the rising spends in the categories like restaurants, footwear, apparel. All these segments have high growth headroom, some of which comes from rising consumption of the category in India, while others come from the shift of market share from unorganized to organized players in the category. So in categories like QSR, the growth headroom comes from low levels of per capita consumption in India, which has always been the case compared to the other emerging markets, which is increasing as the consumer income also increases. The quarter gone by was muted, especially it's a seasonally weak quarter for an industry like FMCG and also for the QSR sector. Additionally to the low base, we expect the next quarter which is coming will be seeing some of positive factors that can be a catalyst for the QSR sector. The industry is recovering, so we see results in a positive surprise on the QSR. Same-store sales growth, we see World Cup coming, which will be helpful for the industry to improve. Also, the festival season, which was delayed, fallen in the Q3 entirely. So, key downside risks include increased competitive intensity from new entrants and also from the unorganized players. There will be a demand slowdown, some changes in consumer preferences, and some raw material price increase that we see. Also, overall demand macro trends going forward. Thank you.